Welcome, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. And we are blessed and honored to have Riz here himself. Riz, how you doing tonight?
Doing well, sir. Yourself?
Doing good, doing good. It's a great night on webinar. I was telling everybody before they came in here, I just want to thank everybody for your flexibility. I had some friends and family in from out of town. They were here till about 10 o'clock last night Eastern time, and I said I didn't really want our Eastern time folks to have to wait that long for webinar. I thought it just made a lot more sense to move it to today. And we got to have you join us.
Absolutely.
That's great. It's great. All right. Well, let's get this show on the road. Let's get it going. Obviously, taking a look at here at the S&P 500 starting out, and we had a massive rally last week. Going into Monday, and then we had a bit of a pullback and kind of a rebound here. Riz, what are your thoughts? Why have we been seeing this huge rally in the S&P 500 as we see more and more COVID cases? We're starting to see some states here in the United States issue lockdown orders again. What is going on?
Yeah, so really from end of September onwards, we could see this just pushed up from the sort of the 100-day, 90-day moving average, whatever the case may be. And this is all because of stimulus talks. We've got a lot of stimulus up and down from, Treasury Secretary Mnuchin, from Speaker of the House Nancy Pelosi, and of course, President Donald Trump via Twitter, of course. So that's what's led to some up and down. Overall, market's been expecting a stimulus. We haven't gotten another round of stimulus. Maybe there was also some talk of having kind of a middle way, just maybe getting some checks out to the American people as sort of like a consolation, but that yet has also not happened. So really, we're left with kind of a waiting game, and we're I think 31 days. So we're left about just 15 days or so till the election, till the federal election in the United States, one of the most important, most divisive, and I would think the most, I would say, difficult and challenging election periods, I think, in my entire life that I witnessed, and probably in many of yours as well. And here we are, the S&P 500 just near the kind of the all-time highs, a little bit below, but it's near the all-time highs nonetheless. And I was said in the chat that the 35, 50, 35, 80 area is just probably kind of that sort of top. And right now it does look like a double top formation in the markets from a technical standpoint. Remember, technicals are essentially showing us what's happening in markets visually, right? You could see them moving not because of some magical number, but because we're seeing it represent visually, along with things that are happening outside of markets, right? Whether tech sells off, or whether there's a rotation, whether it's the quarter selling, quarter ending, whether it's the stimulus, whether it's the election stuff, whether it's the coronavirus. All these things outside of markets are impacting it, not the other way around. And many people forget that. So it's something to keep an eye on. These are the levels we're watching. This week is another week. We have a lot of corporate earnings coming out, and I shared that earnings calendar for the week just recently in the server. So a little bit of a packed and kind of a unprecedented territory here as we head into the last 2 weeks till election.
Absolutely. And guys, if you're not familiar with where that is on the server, please go here and then go down to the guidance and insights. And right here is where Riz shared the earnings for this week. So you can check that out. There they all are. We can talk about those a little bit later because we have some other things we can talk about here real quick. But, you mentioned the stimulus package and things like that. So do you think that if the stimulus doesn't get passed sometime soon that we might see a sell-off?
I think if we get a stimulus, I think, this will be good. Markets will form a base, right? Right now, if we don't get a stimulus or they keep doing this, bullshit of back and forth, I think they're just leading the American people on. I don't know if we're going to get something now since we're 2 weeks in. So the market has to factor that in. Is it going to factor in a no deal stimulus? I don't think it has yet, because if that's the case, we would easily be going back down to the 3420 area in the S&P 500. If we do get a stimulus, I think the market will be bolstered. I think we'll, realize that, the 3,500 area is very, very possible in the index, and that could very well set up a good formation as a support, in fact. So it'll be interesting, and the markets are just waiting. Markets like stimulus, market likes, some of these things, even though I may not personally be a big fan of handing out more and more and more and more money in different means. I mean, obviously certain people do need it, but I think there needs to be some amount of fiscal responsibility. But that's me, right, from my kind of viewpoint.
Low be it for the the stock trader to talk about fiscal responsibility. All right, guys. So let's go ahead. Let's move on. We can come back to the S&P 500 in a little bit. Let's take a look at the breakdown here. Tech still just soaring sky high at this point. Obviously, majorly benefiting from the coronavirus, situation, the pandemic. Currently, just short of 30% positive on the year. It's crazy. It's a huge, huge rush on tech. And even with this sell-off here, we are almost back to that area where we're at up here, about almost 36%. And so, tech is running high, running hot at this point. The S&P 500 itself is up almost 7% on the year, just short of that right now. And everything else currently underperforming. Healthcare is hanging there right around the S&P 500. Utilities actually green above the zero line for the first time since, March. Finally pushing back into the positive side of things. Real estate, financials, and then the dumpster fire that is the energy sector, all still in the negative on the year so far. Riz, what are your thoughts on, tech being so high up now? Is this going to be, is this kind of a setup for a pullback, or do you think tech can keep going?
Yeah, it's a good question around tech. I remember when I was last on one of these awesome webinars, I think it was 2 or 3 weeks ago, Chris, and that's when we had a bit of a tech sell-off already, right? Yep. And I think this was somewhere in the middle of September. So I remember okay, guys, tech's here. I think this is a good area for it to move sideways. I said, maybe it can come down a bit, and it did. We kind of see where that 20% is represented on the chart. It did dip a little bit, but then it recovered, right? And it's no surprise to anyone that tech found the bottom and then recovered, right? We've seen Apple, we've seen Facebook, we've seen Microsoft, Amazon, Google, Alphabet go all up, and of course lift not only the market but also lift the tech sector as a whole. And you can see that pick up in the S&P 500. Take a look at the S&P 500 kind of chart on the right hand side from September on to now. See how it looks kind of similar to tech, right? Obviously very similar to the big pharma ETF, which is the XLV, but also very similar to tech. Right. So understand that there's a lot of similarities between what happens to the tech sector and as contrast happens to the broader market. Now, to answer your question, what's happening with tech, what could happen in the future? I think with markets being where they are, they're kind of moving sideways a bit now. Lately in the last a week or so, we've kind of just gotten back to where we were a month ago. As we saw in the last chart, we're kind of approaching the previous highs, not there yet. This will very much depend on tech. My worry is as we head into election, I don't know what's going to happen with the results, and that's a different topic altogether. But what's concerning to me as things kind of develop is some of the antitrust sort of talk that's happening with, maybe potentially breaking up Google or breaking up some of these other companies like, Amazon or Apple. I don't see it as happening. That's really, really a black swan event. But it's going to depend. It doesn't need to happen for tech to sell off, because if there's a fear of it potentially happening, what's going to happen? People are going to decrease their holdings in tech. Large institutional funds will decrease their risk and exposure to tech as that narrative builds. So we don't need to have an antitrust kind of breakup of these large companies actually go through to get a pullback. Okay, so this is what is known as sentiment. This is what's known as the market recalibrating and adjusting its parameters. And what is the market? The market is, as I've said before, I'll rehash it again, is accumulation of thousands and millions of different individual participants, right? Ranging from you and me, the individual trader, someone who's an institution like a hedge fund. There's pension funds. There's, you know, treasury. The wealth sovereign wealth funds. There's all kinds of different institutions, right? There's family offices. There's tiny funds like mine. There's all kinds of different institutions, and how they participate in the market, based on their individual goals and fears and greed and their risk management. Well, that's the market collectively. So it's very, very interesting to see how things go. I would like some stability once we get past the election period. I think hopefully we can have some direction at that point, because that big catalyst, which is the election, will have hopefully been over and settled. That too is a bit of a question mark, because we're in a bit of a different time now. But either way, once we're past the next 2-3 weeks, I'm hoping we can be past this catalyst and then see how to reassess from there.
Absolutely. Of course, the U.S. election holding a lot of people are holding their breath. Obviously, I think that it's, as you mentioned earlier, it's probably the most heated, the most bipartisan, divisive election that I've seen in memory. And I've, talked with people who have been around for longer than me and Riz put together, and they kind of echoed the same thing. This is kind of the craziest it's ever been.
Yeah. Yeah. And then add that with the backdrop of the coronavirus pandemic and all the kind of stuff that goes with it, whether it's, the misinformation or the lack of information or the lack of data or the hype or the fear or the opposite of completely discounting it. So, I really have no other way to say it and mind my language besides that it's fucked up. It's all fucked up. I have no other way to describe it. And I'm not going to go into my monologue, but it's been a landmark year for me. It's been a very challenging year in some rights, but so is it. So it's been the case for pretty much everyone. I don't care if someone's a billionaire or, worth, $10 or worth negative. Everyone's been impacted in some way. It's a very tough and challenging year. The last thing any of us need to do is, get at each other's throats for some fucking political reason or some, pandemic that it clearly exists. We don't need to be compounding the sort of the dread and the dreariness that's part of this year. So absolutely, I'm a big believer in live and let live. And especially when it comes to those like-minded individuals that share a similar passion and goals when it comes to trading and investing.
Absolutely. No, it's true. It's really unfortunate seeing how, society is behaving right now, but that's something we do need to factor in as to our, our positioning and how we want to attack the market at this point. I don't want you guys thinking this is getting political or anything like that. It's not, but it is something we have to discuss because it does directly impact how the market behaves.
Yeah, absolutely. I'm all game for discussing various different factors, because everything is a factor in markets, whether it's politics, whether it's a virus, whether it's psychology, whether it's disease, whether it's the economy, whether it's money, monetary policy. All these things matter, right? In the markets, everything does. But there's a fine line between, discussing it, having a good conversation, and just, I have no patience for ignorance or outright disrespect of any individual, any stance, any opinion. Opinions are fine so long as we claim them to be. Calling it more than an opinion any more than an opinion is frankly not acceptable to me. But yes, good discussion is all I can hope for. The moment it kind of goes off track of that, then that's when I have an issue with it.
100%. 100%. All right, let's switch gears here. Let's talk about some asset classes. Now, oil has been, a bit of a bear literally and figuratively, this year. And we really seem to be basing here off of around this 37 level. And we just keep bouncing between, about 44 and, 37. Riz, you're the oil man. What is going on here with oil?
Yeah, I like how you said that. The 37 to 44 area is really the range that we can expect for not only the last few months looking back, but also I think going into the end of the year. And I said that before. I said I expect oil high of a $45 good supply demand area equilibrium. We've touched 45. I don't know exactly when, but we haven't gone back to it. We haven't been able to stay there, all right, for one reason or the other. And I say personally, I like oil at $35, $36 a barrel. And you can see that, it's touched there before in the last few months as well. It hasn't quite gotten there yet, so I never took a long position. I'm not shorting oil, obviously, but I'm just kind of waiting and seeing if it ever does get there, then I'm a buyer. If it doesn't get there, and if it just floats around the 40 area like it is now, or gets to about the 43 area, 44 level, I'm okay sitting there, right? If it even goes up to 45, once it goes past 45, then I'm paying more attention, because that's a good breakout. That means something has changed, not just because I'm charts. Remember, we need to look outside of it. If oil is past $45 a barrel, what's changed? Has Saudi Arabia and OPEC countries decreased production? Right? That's going to be reflected in the price. So that's why you're going to see oil break out at 45, right? What if the coronavirus is just extinguished? I mean, I don't see it happening anytime soon, but for just make believe here, if that happens, well, then you're going to see that reflected in demand, because obviously automatically the market's going to factor in an increase in demand, more travel, more airline, more jet fuel, more regular fuel, more everything. So remember, the point I'm trying to make is that the price, the technicals, the charts, and these things, candles, all these things are a reflection of what's happening as a whole, right? Not the other way around. So at 45 or so, I'm very interested in keeping an eye on it. But also at 36, 35 area, I would definitely be considering a long oil. Remember, if anyone is thinking there's going to be like this new renaissance of oil, and energy in the oil sector, I don't think it's happening. And this is coming from someone who has hundreds of thousands of dollars in oil-related companies and even businesses alone. So I'm telling you that very candidly, in the fact that I think the best case scenario, or the long-term positive upside to oil, that case is kind of over, unless we see something like a report or some concrete fact that, maybe we don't have as much oil to pump out of the ground as we thought, then, the market will rethink. But otherwise, I think the best is gone. The best is past for oil. I think, renewable energy, renewable resources, electricity, nuclear power, whether it's clean energy, solar, all these things are the future. You don't need to hear it from me. You probably already know that. But I do have to state that, and even as someone who's sort of the old guard, like Chris says, the someone who's traded oil, millions and millions of dollars worth of oil alone over my lifetime, and it's a sad fact that don't expect $100 a barrel anytime soon, or 60 or 70 even. A lot of people are saying it, and I said otherwise, and I've been right so far. I can be wrong, but I've been right. On oil, it was even right when I said, when it went negative, I said this is fucked. Like, I cannot believe the year that we were having. But here we are, back to $45 oil. Let's see where it goes.
Yeah, absolutely. You kind of hit on something that I wanted to discuss, and that was new, they call it clean energy, and renewable forms of energy and things like that. And obviously that would have a pretty big negative impact on oil itself if countries and governments started mandating that sort of thing. And I know that I haven't read into it too much, but I know that Biden and his campaign are pushing for what they refer to as the Green New Deal and things like that. Do you think that if we see a Biden win in November, that would negatively impact the price of oil?
Yeah, so this is a fantastic question. And politics aside, we do know, and we did see it, in fact, tidbit, when the last debate happened, I don't know if many people noticed, financial media didn't touch on it. But I noticed when Biden had that, what's it called? The last debate with President Trump, and your opinion or anyone's opinion aside, my opinion aside on who did better than who won that debate, that doesn't fucking matter.
Yeah, it's irrelevant.
Yeah, it's irrelevant. What we do know is solar stocks bumped up. If you don't believe me, go check out the charts for before, right? And solar stocks bumped up when Kamala Harris had her debate talk, whatever, with Vice President Pence. Again, same thing applies. Who won, who lost, I don't give a fuck. It doesn't matter who you're voting for, who you align with. The fact is, again, solar stocks got bolstered. Yeah, they had a little bit of a pullback, but that's something that's eye-opening. See, these things, when you see the market's telling you something, right? And Chris, is a fantastic question. I'm glad you brought this up. That yes, I do see more upside. Remember, solar stocks have had a great year. So I'm not going out there frothing at them out to buy them because they're such great value. No, because most of them are overvalued. But the future does look bright, no pun intended, for solar stocks if we do get a Biden Harris win on the ticket. Now, you have to be very careful with that, because don't think like, oh, it's going to go to the moon, or you know, oil is going to zero, or you know, do something like that. Don't bet against oil like that, or don't just put all your eggs in one basket when it comes to solar stocks. Okay, that's something everyone needs to be very careful about. But in short, I don't think it's too much of a negative for oil, because keep in mind, oil is still needed. We're at a good supply and demand point. What's going to matter more is how much production is, right? If Saudi and OPEC countries and Russia start producing more, then obviously that's going to put things out of whack a bit more than some federal election of the United States. Okay. But on the flip side, U.S. solar companies are going to be very much kind of booming at that point if we do get that win. So that's something to consider. And no way am I saying that go out and buy solar stocks and put your second mortgage on your house or whatever. I'm not saying that, but there is some upside. You just have to get the timing right. And that's an if they win, right? If they don't win, am I saying that solar stocks are going to crash? No, but you could potentially see a pullback as the current administration is, of course, more pro current forms of energy like oil and natural gas and on that sort.
Absolutely. All right, let's switch gears from, black gold to gold. Let's take a look here at the gold chart here. And we seem to be, kind of in a bit of a downtrend here over, the last, month and a half or so with gold. With the market, kind of ramping back up. Riz, it makes some sense that Riz starts to pull back, that gold starts to pull back a little bit and kind of maybe come back to earth.
Yeah. So I can't exactly remember, but someone can maybe hold me accountable to this. I think when I was last on, I said, I do see some downside in gold from, where it was near the 2000 level. And here we are, we're at 1900. I still am not a buyer of gold. And people would have said, well, you didn't buy gold. How come you didn't buy gold? For this rally, I said, I felt like once it went above 1800 area, 1600 even, I was less and less of a buyer. And then the moment it broke 1800, I was just like, okay, I'm not buying this. And I'm glad I didn't. I'm still not too big on gold just yet. And don't get me wrong, I've always liked gold as a bit of a hedge, as a bit of a safe haven, but not at 1900 just yet. Okay, the world isn't, getting decimated just like everyone thought. Inflation isn't going bonkers, so that's one thing. It isn't. Can it? Sure, but we're not going to see that happening in a snap of the finger. We're not going to see that happen in a week. We're going to see inflation tick slowly, and it can happen. But until I see something like that happening, so I see something shift in the broader economic and monetary situation, I don't see a full bull case for gold just yet. Okay, whether it's 1900 or 1800 is besides the point. There's more to these things, whether it's gold or oil or, natural gas or any kind of hard commodity. There's more to it than just technicals and just these little candles and numbers moving up and down. And I wish people saw that and understood that more, because I think there's this big lacking need. And people are going to ask, like, okay, how do I learn more about it? Well, by sticking around and listening and being aware and being participating and just being around people that talk about it. I think it's going to help. So yeah, I don't think there's any textbook case or course on learning how commodities move and how to chart them, but there's been many people who had no idea and they stuck around and they've learned a lot. In fact, many people in elite, really like trading energy related stocks or, crude oil ETFs or gold ETFs or gold outright, simply because of what they've learned about how these commodities move. So yeah, a bit of a tangent, but yes, I don't see gold kind of going back to where it was just yet. We have to keep a very close eye on the markets, plus inflation, plus the whole coronavirus situation, because if we see a perfect storm arising where we see COVID cases are already increasing, but if we see like large scale countrywide shutdowns again, then obviously that's bad for market, and you'll see markets pull back, and you might see oil go down gold go down as well, and actually oil as well. You'll see everything come down, but then there's going to be a period of something like gold come back up, similar to what we saw in March. If you look initially at March, people would see that everything got decimated and dropped for that first month a bit. Then people are like, wait a second, this benefits gold. So then you saw this rally in gold start, right? So something to keep in mind. If I'm not saying once, if we do see a reversal of the course with the global economy in relation to shutdowns, you'll see everything tank, including markets and oil and gold and whatever else. And then there's going to be a period where, okay, maybe gold starts picking up again. But that's a very, very, I would say, speculative, thesis there. But for now, gold is just letting gold do its thing.
Absolutely. Scott looking to buy some bars, apparently. Wants to get in that physical gold price a little later.
So funny story. I have a decent amount in physical gold and silver myself. I'm not going to go into the amount. But I do have that as a hedge, and it's just kind of stashed away. So that's something that's separate. That's separate to what we talk about in markets, right? So if you have like mine is not just the metal itself, but mine is in limited, edition coins that are directly from the mint, brand new in box sealed case. So not only do I have that metal itself, but I have that, it's a currency. It can be used as a denomination value plus any exclusivity and all that stuff. So that's the way I do it. I don't just go to like buy a bar of gold, although it's fine. But I rather do it from the actual mint or the reserve or whatever country you're in and whatever you call your treasury. But ultimately, that's the way I do it. But I have some stashed away. That's an outside market, world-ending hedge, and also good for gifts, right? It's good for gifts. It's good for just having that there. So it has multiple uses as well. So that's the way I do it. Having exposure in markets to gold via ETFs and stuff. Remember, that doesn't mean you're holding physical gold, right? Doesn't mean that when you buy an oil ETF, you're holding the physical oil. So just very, very aware. It's kind of you're having exposure to it. But it's not the same thing as having the actual metal or having the actual barrel of crude, right? Which you wouldn't have. But in the case of metals, you can.
Guys, I know that Riz said he didn't want to, talk about how much gold he has, but I have a picture here of Riz's vault for all of you to check out. Here he is.
Not quite that much, but I have tried to swim in it. Didn't work out.
It wasn't like this picture. That's unfortunate.
Exactly.
Sorry, guys. I couldn't miss that opportunity. That was too perfect. So
it was great.
All right. Well, let's talk about a couple of the trades that we took this week, and then we can talk about whatever else you guys have questions about. But first, let's take a look at DraftKings.
Yes.
Oops, might help if I type it right. Okay, so we got in on the 12th for the long play. I think we let this one go, obviously, but we got in on the 12th at 51.25, hoping to get the bounce here, and we just really didn't get it. And so, I mean, what's going on with this one, Riz? Obviously, this is, for lack of a better term, just online gambling. And fundamentally probably a bit questionable
Yeah, so
as
it's
far as the numbers are concerned.
mhm.
What was the thought process on going long on this? Was it just a
Yeah.
technical
So let me
recovery?
expand. This is an online gambling company, betting company, and their stock is being used as an online betting opportunity as well
Hmm.
for most people. In our case, it was a little bit more calculated. So we did go long a few weeks back, and we like you said, we went long this time, but before, sorry, we went short on it as well, and we kind of got bounced around. We made money on the short, but I got out prematurely. I got out prematurely early because they had that, I think, like a $48 offering or something, or sorry, no, I
Yeah.
think a $52 offering price, because the DKNG DraftKings did do a share offering a couple of weeks back. So I said, you know what, I don't want to fight that. That's something changed while we're in the trade, so I got out for money. Right, made our money and got out. What happened though is it kind of touched 52, got back there, then it kind of held there for a couple of days. So I'm like, okay, let's see if we can play this rally back up, because I think the 52 offering price is fine. I think that's going to give a bit of a support, and that did not happen. Right, so a classic example of getting out too early, because I can't tell the future, and that catalyst came out with that short. But then going long wasn't the most ideal entry either. But at least I got out. I protected the bases. I got out. I think it was a small loss or near break even. Not much damage done to me, and I got out. And that was a good decision, because after that it just continued to puke, as you can see, and it's right around its 50-day moving average. And I would not be surprised if $42 area is the next stop.
Yeah, guys, and this is something that's really important, is to keep an eye on the guidance and insight section.
Yes, absolutely. That's another key, right? The stock trade alert, the option trade alert, and of course the guidance and insights tabs, channels, whatever you want to call them, are critical to really staying on top of what we're doing.
Yeah, absolutely. Yeah, it looks like we closed on the 14th, on this. So in this big down candle here, it looks like we closed fairly early in the day. So that was a very, very good decision on that one, to say the least.
Yep.
All right, let's look at Docusign, DOCU. In long on the 13th at 236. Obviously, we kind of puked a little bit here on Friday, sadly, but still looking pretty solid on this. A really nice looking uptrend here.
Yep.
And this is one of these tech stocks that is kind of benefiting from the coronavirus, if I'm not mistaken.
Yeah, absolutely, and one of the biggest benefactors, and it's a good company in terms of, obviously, a lot of overvaluation in a sense, but again, we can't fight that in this market, especially with companies that are benefiting from a pandemic and a COVID situation. And even after that, we know the world has already changed. A lot of people are going paperless. A lot of companies are going paperless. A lot of people are working from home, and they're signing documents online and sending them back and forth. So I've done it. This thing for long term has a lot of potential. It just kind of depends on if the fundamentals can catch up with the technicals, because it's had a tremendous rally from about $80 in March to what it is now, $334. So you do the math on that, right? But on a medium term swing play, like we got in at 236, like you said, I do believe it has upside at least till about 260. I think it can go there, to be very conservative. Again, that's more of a swing trade. For long-term investment, well, there's upside long term. We just have to make sure the fundamentals catch up, and that's more of an earnings to earnings type of thing. So really, I still hold it. I think there's still time that we can hold this. I don't mind carrying this for a little bit longer, even if it starts moving against us, to give it some time. But so far, the trend is still in play. It hasn't broken just yet. The moment we start getting below 230 to 228 area, then I'm going to be a bit more hesitant on keeping this thing. But for now, I still continue to hold and be bullish on it.
Yeah, and I see a lot of people went ahead and took that in Elite based on the check marks here in Discord. And please do, if you do take the position, it is very helpful for us to know how many people are in and what the just overall participation in Elite is. So it's very helpful. If you can, please click those green check marks when you do enter a position off of the alert. That would be really helpful for us. All right, last one on the list for this week is Fastly. And I can't type tonight. There we go. Let's clear these old drawings off. That's much better. So got on here on the 15th off of the crush here. 30% drop. Holy cow! What a drop that was. In long at 93.25. We're currently getting a little bit closer to stop loss here at 79. Riz, what's going on with Fastly? What was the big the catalyst here?
Yeah. So I took this as very much of a knife catch dip buy situation. Started off with a small starter position and then added more after Friday's further drop. This dropped due to earnings. I don't know why. There's an E symbol in end of October, but ultimately they didn't have really a good prospects for their kind of, I would say, TikTok exposure. So sorry, I don't think it was earnings. It was their TikTok type of deal stuff. So that caused that big 30% drop. Well, you're looking at that big gap down as a 30% drop. And I'm looking at it as a knife catch opportunity. I made that very clear. I still hold it. Can it hit stop? Absolutely. I think it can, as it's really, really near that 190-day moving 100 or 90-day. I know you have it 90-day here, Chris. But ultimately, I'm carrying this for now. It was a knife catch. That 79, 78 area, whatever it is a big support area. So let's see if that can hold. I don't think anyone should be really shocked that it kind of had a little bit more of a dip than it already did, because these things do happen. But the moment it starts recovering, if someone isn't in the trade yet, then it may be a great opportunity to get in at a better opportunity than even I did. So we kind of have to see if this thing can hold the current price, especially that whole dollar mark of $80 per share. And ramping into the end of November, start picking back up. Otherwise, we do not want to bag hold this, in my view, below 75. Personally, if it goes below 75, I am probably going to just bite the bullet, because this is not something that is a very fundamentally great company or something that I'm a big fan of, or, so it's a pure technical trade, pure, kind of a risk reward standpoint. But for me, line in the sand is about 75.
All right, that sounds good. Now, I want to go ahead and open up the floor to questions. But while people are typing their questions in, we had a really good question in the chat room earlier. I think it was maybe a week and a half ago. Someone asked why we follow the S&P 500 as opposed to the Dow Jones Industrial Average. I mean, obviously, on all of the big financial shows and things like that, they talk about the Dow Jones Industrial Average. So why are we watching the S&P 500 as opposed to the DJIA?
Right. So yeah, that's actually a good question. Now, a lot of people I know in financial media quote the Dow. The Dow is this thing, but really the Dow in one way is very similar, moves very similar to the broader market. I just prefer the S&P 500. Why? Because this index has many different, obviously hundreds, 500 of the largest US based companies by market cap. So it has a lot more, I would say, broader, it casts a wider net. Whereas the Dow, has US based companies, largest ones, but, may not be a completely accurate representation of the whole US market. Whereas the S&P 500 has, many tech stocks, as we know, but also many manufacturing stocks, many airline stocks, many, software stocks, many consumer discretionary stocks, many pharmaceutical stocks, many biotech stocks. The same cannot be said for the Dow Jones index, right? The Dow is only about 30 companies. And then they use the index out of that. They make, kind of an average, think of it like. Whereas with the S&P 500, they have 500 companies that they do the average of. Granted, it's more so tech focused over the last few years, simply because tech has taken such a large lion's share, and it's not a fault of the S&P 500. It's just the way things have worked out the last few years with companies like Apple and Amazon and Google and all these things just doing so tremendously well. Where you have companies like Exxon, which is also in the S&P 500. You have things like Chevron and all these things that are large U.S. oil producers. They've gone nowhere, and in fact, they've gone down. So that doesn't bode well for some of these companies. In fact, I think Exxon got removed out of the Dow Jones index, if I'm not mistaken, not too long ago. So personally, the S&P 500 for myself, since all my trading years I've been monitoring it, I look at the Dow as well, but very, if you want that extra bit of reliability and broader picture, then you go with the S&P 500. And of course, it also helps that many institutions, many money managers, hedge funds, blah, 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 they all also monitor the S&P 500 more closely than the good old Dow.
Absolutely. All right, so Scott has a bunch of questions here. And basically, he's wondering if the current news headlines coming out about these companies yesterday is going to have any significance as opposed, in how the stock is going to move. So he talks about, BA, Boeing, the 737 MAX apparently has been approved for flight back in Europe again, if I'm not mistaken. And, how are headlines like this, like he listed here, going to help or hurt stock price?
Good question, Scott. I will say this. I mentioned this in the masterclass. When something hits the wire, when something hits the tape like a headline, it's widely disseminated. In this day and age, it's so widely disseminated so fast that by the time you're done reading the headline and the article, it's already factored in the market price. It's already moved. Like case in point, Chris, can you bring up ticker REYN? Right. We know that hit the wire, but look, it's kind of in the price right now. Or when exactly it went in, I don't know. Take a look at PEP. If you're messaging me about it, or you're typing in the chat room here, it's been in the headline. Where does it matter? Like, take a look at it. 170 million into promote Hispanic diversity, non-issue. Irrelevant. Am I saying it's a bad thing? No, it's great. But from a stock standpoint, company standpoint, makes no difference, right? So AMC, opening up 25% of the theaters. Theater business, in my view, is pretty much dead. Look at how it moved, right? Positive. It's not opening in New York City, but they've opened in New York State, 25% of movie theaters. So positive, but I'm not comfortable with the prospect of movie theaters. A lot of people have been trying to catch the dip on this. Not me. Right now, it's looking good, right? Look at that green candle. But even that isn't looking too solid. So in short, I can say headlines are headlines. How it impacts the stock from day to day will matter on what the occurrence is, right? If there's stock manipulation, if a deal hasn't gone through, or if a company CEO is fired or a company CEO is replaced, that can have an immediate effect on the stock price. Something outside of that, like, ABC company planting 1 million trees in Uganda, is not going to matter for the stock. Okay, so in a nutshell, be very aware that once something hits the tape in terms of the news, you usually reflect it in the price. And if it doesn't move much, it's not moving much because the market doesn't see or care as much about it. So don't think like you have some, or me or any of us have some kind of edge just by reading a headline. No, it's already out there. Computers, algos, institutions have read it. They've traded it already before we can even open up our brokerage account. Okay, so something a lot of people kind of fail to understand. They're always a step behind. When they try and trade headlines, they're always a step behind. I get it far too much, Scott, so don't worry. That's a great question. It's something that I wanted to address at some point, and you already asked it, so that's great. Never chase a headline, and that's why I hate it. Like, I'll give you a classic example. Oh, Sony is releasing a PlayStation 5 this year. Let me buy Sony stock now because it's releasing in a couple weeks or whatever. Okay. Everyone and their grandma and their dog probably knows that PlayStation, Sony is releasing a new console. Okay. Is that the basis to place a trade on? No. Is someone going to buy the stock because they're bullish on delivery numbers of PS5, demand, and how it's going to impact their next quarter? Sure, that may be a reason to buy. But buying it because the PlayStation 5 is releasing in the next 2 weeks, to me, makes no fucking sense. Sure, the price could go up, but it's not because of that news. Everyone knows it, right? Like, it's just, it boggles my mind. And I get it. It's a classical kind of way of thinking, and it makes sense. But think of it this way. The moment the market knows about something, it is more often than not factored into the price, period.
Very well stated. Very well stated. Eric wants to know what we're looking at this coming week. Obviously, the earnings calendar is going to be a big one.
Yeah. Looking at that, I'm gonna also see Monday's always a tricky one because I don't. It's important to plan the trades at night and yada yada. But Monday's always tricky. It's the first day of the week. Things have happened over the weekend, and guess what? We don't want to be too directionally inclined. We don't want to be biased leading into the weekend. So maybe we have some earnings trades. Maybe we have some trades that we avoid because of earnings as well, right? Remember, earnings are a coin toss. For those of you that are new to markets and new to joining us in Elite, earnings are a coin toss. I don't care what anyone says. They're a 50-50. Anyone thinks that they have an earnings strategy, earnings play strategy is a fucking moron. Okay. And I've seen these people. I've spoken to them and I felt disgusted afterwards. So, in fact, I've tried to tell people the error of their ways, and maybe they listen, maybe they don't, and I don't care, frankly. But do not be fooled into thinking you have any edge by playing earnings. So when we do play earnings, whether we're buying the stock or shorting the stock, whether we're buying options, whether it's call or puts, we know and go into it knowing that it's a speculative trade. Selling premium for earnings is great. As someone who's done a lot of options writing and selling of premium, for earnings, yeah, you have higher IV that you get to capture, thus more premium, but do not get burned doing naked call rights and options put rights unless you know what you're doing and you are aware of the sizable risk. Writing options is a very peculiar thing, especially if naked calls, right? Unlimited risk, and I've been burnt on that. I've written a naked call in a stock for earnings to capture great premium because the IV was like 300%. To me, it was like it's almost free money. You know what happened? I mean, I've done it many times. It's worked out, and there's maybe probabilities of less than 1% chance of it happening, but the stock moves up 50%. Do you know what happens when you do even a further out naked call rate on a stock and that stock moves up 50% in one day? It saps your buying power in the account. Not only does it turn something that could have been a few $100s or a few $1,000s in profit, turns it into tens of thousands into losses, but it also further drives home the fact that this was maybe a less than 1% probability, yet it still happened. So be very careful with naked option rights. If you're using spreads, at least you have some protection there. But again, that's a very risk-reward scenario. I know that writing options can be very favorable, especially if you write puts on companies at strike prices that you're willing to take position of them. So, Chris, if you can bring up GSK, GlaxoSmithKline, big pharmaceutical company, and it's kind of been dropping lately, right? Take a look at this, right around 36.50. So if I like GlaxoSmithKline, okay, it's not going anywhere. Its fundamentals are decent. May not have the best pipeline of drugs and pharmaceutical products right now, but it's not going anywhere. People are going to need their medication and drugs that they provide. So let's just say in my head, I'm okay buying it at 36. So what I do, I write a naked put option at a strike of 36. And I collect the premium. If it goes nowhere, I keep it. It's like doing a limit buy order and getting paid for it. If it does hit 36 and by the time it closes, the option expires and it's in the money, then I'm going to take delivery of 100 shares for every one contract I wrote at $36. I was already okay with that, right? So a quick and dirty options writing, naked put writing breakdown for you guys. But that's the way I would do option writing, okay? Very careful with naked call writing, especially on these crazy overblown tech stocks like Zoom or TTD. Chris, if you want to bring up TTD, the trade desk, this is just, I remember I evaporated $10,000 in, I think, 2 hours on a TTD naked call write for earnings because the stock moved up so much. Even after me giving enough room, it moved up 20%, and it was like a $400 it was like a $300 stock at that point.
I remember that.
Yeah. So I remember sitting in a conference and seeing that an alert or a notification from Interactive Brokers saying that, this position is down or you're losing, $10,000 on it. Just like, At that point, I was like pissed off, but I was like, what are the fucking odds? Like I looked at the probabilities of it, and it's like less than 0.5%. So, and this is the par for the course. 0.5% chance, 0.5% chance, 0.5% chance happening can still happen, very, very slim margin. But when it does happen successively 2 or 3 times in the year, there goes all the option writing profits that you had collectively gone in 3 trades. So, yep. Okay, just be careful. A couple other questions I think coming in now.
Yep. Jacob says, I've been about 50 to 65% cash this month, and it's been working out. But would you recommend more than that for these next couple weeks going into the U.S. elections?
Great question, Jacob. Yes, I myself in my trading account, I'm about 65% cash or so. And I mentioned that I think in the guidance not too long ago. And that changes, right? Before it was about 70, 75% before the tech earnings, before the tech drop. And then we kind of bought some tech companies and we did well. But no, I cannot fault you for being 50 to 65% cash, even if it's a little bit more. We could see markets continue to rally to 3,550, 3,550 on the index leading up to elections, but that's fine. You don't need to perform or outperform the index or do anything. You just need to protect capital and make some money when you can. So if you are essentially sidelining yourself for the most part because of this huge, crazy, important question mark, which is the election, because it is a question mark. Anyone that knows what's going to happen is a heathen and a liar. So I can't fault you for that, right? It's not a bad idea. Cash is one of the best hedges. Why? Because it has utility outside of just buying stocks. If you buy, a S&P 500 inverse ETF, it's a hedge, but it has no utility beyond that, and you have risk even with that. With cash, holding on to it, you have no risk. The only downside is inflation, which is not really much. When you look at it on an annual term, if you look at it from holding for a couple weeks, not a problem holding cash, right? So that's fine.
Thoughts on Amazon this week and what happened to it on Friday, that negative 4% candle?
Yeah. So this, I believe, is a little bit of profit taking, right? Take a look at where it was. It's dipping down. So already the technicals were pointing to a further drop. Ultimately, I'm not surprised. Right? That was a really crazy candle for Amazon. Look at that area where it kind of hit the 50-day moving average and kind of ticked back up. Still, I would not be surprised if you see Amazon at 3,200. Okay, I think we see Amazon at 3,200 sooner rather than we see it at 3,400. Okay, that's the you want to think about price movements, if and then statements, not this is happening type of statement. Okay, many people get confused, right? And that's what markets are. They're probabilities. So yeah, 3,000. I really like Amazon. Again, I missed the boat on Amazon. One of my biggest, I would say, missed opportunities. But it doesn't matter. I mean, I get opportunities. I miss opportunities. We're human. Every day is another day. So Amazon, I'm not a buyer just yet, but I really do like it at 3,000 area for the long term. It's very difficult to swing trade this stock because it's a very much of a momentum stock, but also kind of a large mover in its own way, and not for everyone, right? Clearly, even if you buy fractional shares on it, it's not really trading like an AMD, or it's not trading like an Intel, it's not trading like something that is a Tesla or an Apple. It's not really trading like that. So it's its own kind of thing. So be very careful. If you like Amazon and you don't mind holding it for a few years, it doesn't really matter if you buy it at 3,200 or 3,000 in the grand scheme of things. But for me personally, I'd rather wait.
Any election plays for Trump? Smith & Wesson, obviously, for Biden.
Yeah. So I hold Smith & Wesson. I've held it for a little bit. I still hold it now. Similar to what you said, it's a bit of a election chaos type of hedge play. It's not going the greatest. It's not completely horrible either, but I'm okay with just seeing how it plays out, right? It's one of those hedges. It's one of those positions that if things go horribly bad, horribly wrong, regardless of who wins, at least this is something that can potentially do well, simply because of a trade standpoint, not because something fundamentally may have changed because of one wins or the other. We already know gun sales have been going off the charts, and many resellers are not able to keep up with demand. We already know that, so that's nothing changed there. Yet the stock price still kind of moving sideways, relatively speaking. Once it breaks above that 50-day moving average, that would be a very bullish sign. So keep an eye on that. Remember, 2 weeks left, so let's see how things go.
All right. Well, we've been going at it for about an hour. So if you guys have any other questions, please post them now. We've got Riz here. He is ready to answer your questions for you.
Cloudflare, good question. Net, I think, is the ticker. Yep. So I like it. Obviously, it's done really well. Do I like it for a buy just yet? No. Momentum players, hype type of plays, sure, this is one of them. Not after this run. It's obviously done really well. It's one of the benefactors of the post-COVID world, but not yet. Okay, I don't see this company, as a bad long-term hold. I just rather have more. What's the word? I'm blanking on the word, but I'd rather have some more in the basket, so to speak, right? More in reserve, and at around $40, way better than buying it at near 60, in my view. Could this continue to go up? Of course, we know how these things move. It's just not a trade I'm comfortable getting in at this level just yet.
What are our thoughts on re-entering Big C long? Are we still bullish on it medium term?
Yeah. So, Mike, good question. In fact, I was eyeing this after I closed for profit because of that little bit of a jitter and whipsaw in markets. I do like it. I do like it for re-entry. I would rather see how tomorrow goes and potentially Tuesday with it, and then kind of getting in at that point, either for a better price than where it's at, or maybe just saying, whatever. I think this train can continue to run easily. I think to 115, 120. At that point, I'm a bit more hesitant holding it beyond that, because just because it's hit 150 before doesn't mean it's bound to get there just yet again. So I do like it. I do like it for medium term. I just rather see what happens tomorrow and Tuesday. Why tomorrow and Tuesday? Because Monday is first trading of the week. It's very hard to get any direction on a Sunday night, which is what it is right now. So how it moves, how price action is in the market, how price action is in the individual stock will very much help me in getting an idea how this thing is moving and where it can go to, and as a result helping me with my entry. Eric asks, question, any simple macro econ books? I don't really have any macro econ books, really. A lot of it is learned while being around it, markets, being around the chat, elite, my guidance, and all that kind of stuff. So there's no macro econ book per se, but there's some talk about market cycles and stuff. I think I don't have it off the top of my head, but I know Ray Dalio has spoken about a shift in how monetary policy and all these kind of things. There are some good sources out there. I just don't have any off the top of my head. But I think most of your understanding will grow as you continue to do it, as you continue to search and see how things move, and how no one has sort of an affirmative answer for any of these things. It's all best guesses and probabilities.
Absolutely. Well, guys, I think we've been at this for an hour now plus. I think that's good for tonight. Wanted to thank everybody for coming out, and especially thank you, Riz, for giving your time here to some of the guys in Elite here on webinar. It's always great having you on the show.
Pleasure is mine. Thanks for hosting and having me on.
Of course, anytime, anytime. And so, as always, if you have any questions, don't hesitate to PM us in Discord. We're always here to help, and we want to, help you grow as a trader, and just a better understanding of the markets in general. It's great having this amazing community here, and encourage the guys in the chat room who are not here tonight for the webinar to try and see if they can't get on here, because this is really where a lot of your benefit comes from, is for the understanding of why we're doing the things that we do. It really does give a lot of insight into that. So I would just encourage those in the chat room who aren't here on webinar tonight, tell them what they're missing.
Yeah, absolutely. Nothing like being live. But absolutely, thanks a lot, Chris. I'm sure a lot of people are going to watch the recording as well, because they couldn't attend. But thanks for doing these, and thank you everyone for joining and being a part of Elite. I hope it's going well and you're getting a lot of value and insights out of it. We'll stay in touch. Have a good rest of the night, and we'll be back at it tomorrow.
Yep, and as I always like to say it every week at the end of every webinar, we'll see you in Discord on Monday. Good night, everybody.